And now joining me, the billionaire investor, financier, speculator, philanthropist, and thinker, George Soros. Thank you for joining me, George.
My pleasure.
You were a great supporter of Barack Obama. You helped raise money. You gave a good bit of money yourself. Are you satisfied with the job Barack Obama has done?
No, I'm not satisfied. The solution that he found to the financial crisis, which was to effectively bail out the banks and allow them to earn their way out of the hole, was, in my opinion, not the right solution. He should have compulsorily replaced the capital that was lost.
Which in effect would have been nationalizing the banks.
This is what they call nationalizing the banks. And he made the political decision that that is un-American, will not be accepted.
What about the broader issue of Obama's leadership? Not just the bank bailout, but on the dealing with the auto companies, dealing with the housing market, dealing with the economy, the stimulus. I mean, on all those issues, I think you can look at any one by itself, but I think he's done pretty well, and I think hasn't in some ways gotten the credit for it because the crisis was averted. And so now the Republicans can say, there was no problem. We didn't need to spend all this money.
That's exactly right. He's paying a very heavy price for actually saving the country from going into a very deep recession or depression because people haven't experienced it. And he wanted to be the great uniter, and he wanted to carry the country, sort of bring it together. But the other side had absolutely no incentive to do it. So it takes two to tango. So that approach has failed. And I think in Massachusetts, he got the message. And I hope that actually now he's taking the health care back to Congress and overcoming the filibuster, the 60% vote requirement. And I think that's the right reaction. So he's sort of taking a tough stance. And that may be the turning point. It depends on how he follows it up. But this we may have had, let's say, last week, the deepest point of his, Roosevelt in his first year was also sort of tentative and didn't take a really tough stance. And he wasn't that popular either. Then he really got tough. He was threatening to increase the number of judges on the Supreme Court to overcome that obstacle. And eventually he succeeded, and that made him popular.
Well, he failed at the court packing, but he succeeded politically, is what you mean.
Yeah.
So one of the proposals, because banks have been making these unexpected and many think undeserved profits, has been to, in various ways, claw back some of the money. The British and the French are trying a tax on bonuses. Obama is talking about a tax on bank size. There is another proposal out there to have a tax on financial transactions for the future.
Yes.
What do you think of all these proposals?
Why shouldn't those transactions provide revenues to make up the losses? I think it's a natural source of revenues.
One more tax to ask you about. The tax on carried interest, which is at the heart of hedge funds like yours, has tended to be at the level of capital gains. Should it be at the level of income taxes?
I think that the earnings of the hedge fund managers should be capital gains. Sorry, that's earnings. That should be treated as earned income.
As earned income?
Yes.
Would substantially cut into your own income?
Yes.
Do you think that there's some measure on financial reform that he needs to do that is not currently being proposed?
Look, I think that the financial reform is not an urgent thing. It is more important to do it right than to do it right away. because right now there's no danger of another credit boom. It's quite the opposite. Look, you want to keep regulation to a minimum because financial markets are inherently unstable. But regulators are also imperfect. And actually they are worse than markets because A, they are bureaucratic and therefore they are always behind the curve. And secondly, they are subject to political pressures. So you want to keep regulation to a minimum, but you must accept a responsibility that, for instance, Alan Greenspan explicitly rejected, which was to prevent asset bubbles from growing too big.
Bubbles like in technology stocks or in housing. Greenspan said that's not the job of the Fed because if the market can't detect the bubble, how can I as a regulator detect it?
And he's right. However, knowing that he is bound to be wrong, he nevertheless, knowing that markets will not prevent excesses, has to move against it and has to take some steps, which is either too little or too much. But the market provides him with feedback, and then he can see whether it's too much or too little, and in fact, do more.
And there's a certain commonsensical aspect to this, which is if you look at the Canadians, when growth started going very strongly, they started raising the capital requirements for banks, insisting on lower levels of leverage, precisely on the theory that, look, this is getting a little out of hand. And,
right.
Greenspan seemed not to want to do anything like that.
That's because of this false belief in this market fundamentalist belief that markets correct their own excesses. They don't. When I see a bubble, I buy that bubble because that's how I make money. So you can't trust the market to correct it, you see. So that's the lesson we have to learn. And actually the Chinese, you know, they increased the minimum capital requirements that banks have to hold 17 times when the market was getting overheated. And then when the crash came, then they really let it rip.
And we will be back with George Soros right after this.
I find this the most disturbing thing in the present picture, that neither side fully knows what's in the mind of the other side. And things have started going wrong.
Political activist. What does it tell us that when looking at this last 4 or 5 years, China basically handled its economic policy much more successfully, much more wisely than we did? And it's not just China, even the Indians and the Brazilians and the Indonesians, I mean, they all were fairly sensible. And it was really Britain and the United States, it was the advanced capitalist countries that turned out to be running very weak policies.
Yes, yeah. I mean, it is effectively a bankruptcy of this market fundamentalist belief, which really came in with Reagan and Thatcher. Now, Reagan is still in the panoply of saints in this country, and we just have to recognize that something went very wrong, and we need to reformulate our view of how financial markets work.